Hello and a warm welcome to this analysis. This one I've done on the Nifty Small Cap 100 Index. Now, we've seen the small cap market do tremendously well since the month of April this year, especially during the phases when the large caps were getting laggard on seeing some internal shuffling happening in the month of August, then again from mid September to mid October, and then again post Diwali till last Friday, where we saw the small cap index has been doing outstanding. Very little pullbacks, non-stop solid rallies happening in it. So, what lies ahead for the small cap index? Let's try to analyze that and come to a conclusion. So, I've done a multi time frame analysis out here. I'm going to start with the quarterly chart to try to justify what I'm seeing out here, and what I'm trying to show is how the index behaves. While it in a major in every bull run that we've seen in our markets since the small cap listing of 2004, it has always outperformed in the bull run. But please keep in mind that it also majorly underperforms when the market corrects. Okay, a shallow correction, bear trend in a large cap leads to a more sharper correction in small cap. So you need to be well aware of the damage it can do in that case. So here is a quarterly chart of the small cap index. Now the small cap index from its listing, this is what I was able to decipher, was that the first move from 2004 till 2008, that is just before the subprime crisis, we've seen a move from 700 odd all the way to 6,000. That's a period of almost 4 years. That's 15 quarters. And then we've seen a sharp decline in a matter of just 1 year, that's 4 quarters, of 88%. So that's the damage it showed real early on that it is capable of doing. It's all rosy when it's all going well, otherwise it can really cause a huge wealth destruction also. Then we see a rally from the subprime lows, that is March 2009. From there the rally begins, but all the way to 2018 January, which is a huge 9 year period. But in that also, it's not that rosy in the first part, as we saw that from 1350 rally to 4600, then a dip back to 2500, losing 50% of that gain, and then another super rally from there, which is almost more than a almost a 4x return from 2500 to 9600 kind of return it gave from 2013 till 2018, 5 year period of that. And then again a sharp reversal. This reversal is 2 years, 8 quarters. Again, it shaved off 78% of its gains from 2009. If I take the gains from 2013, then it's more than 88%. So another instance of when it corrects deep like that, when it gets into that bear path. From there, from the COVID lows, we can see a super duper rally with a small pullback, which came in from the month of Jan 2022 all the way down to April 22. Then again a sideways in this one. So if we just look at the pullback which has taken place during that period, there will be something like 50%. 50% pullback took place in that small area, and then a super duper rally from there has begun. Another interesting part of this thing is that if you join the peaks of each high, that's 2008, 2018, it broke above that this month, the end of November. Today the November candle has got over. The quarterly candle is still on. This was the September quarterly ending, where it just about managed to break above it. But this quarter so far going on is seen a solid upwards move still happening. But December is where the quarter ends. If there is any selling pressure, and by chance it December quarter it closes again below the trend line, which is its opening at 12,760, that could be really bad news for the from the medium term perspective, because we've seen how ruthless its corrections are time to time. It's also coincidentally covered 15 quarters almost 4 years of the uh, move, which is also matching with the first 15 quarters of this since its listing period took place. But that is secondary. What is more important right now is that it's breached above the trend line. It needs to continue to stay above this trend line in the quarterly chart. December 30th would be the which when we'll be checking it out. Now let's have a look at the monthly. Coincidentally, as so far the Ichimoku setup is quite bullish. Everything slanting up. There's no sell signal in the graphic environment theory. I'll be coming to the resistance soon. Let's have a look at the monthly chart. Again, extremely bullish. We can see that the January 2023 quarter tried to break, fell down, continues to break. Again, you can see September monthly candle just about managed to close above it. October was quite bad. November has been a delight from a small cap shareholder or a small cap mutual fund buyer point of view, and vindicated the holding it had, those who held on to it there. Let's have a look at the weekly chart. Again, monthly Ichimoku graphic environment is quite bullish. Uh, Weekly also very well placed. There was a small phase of sideways from mid September till mid October that the entire market went through that rigmarole. And again, we've seen a very strong recovery in this was on the time when there was the Palestine Israel issue going on, and we had at least the second half of this corrective, but a solid bounce emerging out of that, and continues to be looking very strong even in the daily. Let's have a look at the weekly daily. Daily also slanting up nicely. Small, very small dip. Did not even test a trail stop loss of investors out there, traders, and has zoomed away. Now, where are the supports? Let's take them again in an ascending order now. The support is at all the way down at first at 13,475, which is this gap up area. One gap covered. This gap is still open out here of 13 November. So support at 1300 and 350 in the daily. Let's have a look at the weekly support. That's also near the trend line, 12,600, much lower, where this consolidation has taken place, which is extremely crucial even from the quarterly point of view. You don't want to see the quarterly candle close below 12,700. Okay, so let's look at the monthly to a much deeper support around 11,500, where this huge consolidation took place. This channel breakout is there. So 11,500 is where currently the monthly support is. So as we go in a higher time frame, of course, the supports will be much further. Now let's talk about the quarterly chart, much deeper near 8,900. Now, I haven't spoken about the resistance in any of the time frames so far because it's at a resistance in across all time frames. So, as per the Ichimoku price theory, which is advanced Ichimoku, we can see that there are three probable price theory targets in Ichimoku. The first one is where it has closed. It need not be exactly there because this is a quarterly chart, and the targets are based on the monthly time frame accordingly. So there will be a plus minus of a few percentage here and there, but nevertheless at its first resistance of 14,175 200, if it can sustain above this, which would be at least the December quarterly candle close above it, and of course entry into the January also. Monthly January, I would say at least 2 weeks of January sustaining above this level, it would mean that it is opening up for the next Ichimoku price target, which is at 16,000. That's a huge move on the upside. And then above that comes the next major one, which is around near to 19,000. So a lot of upside probability provided each of these walls is taken out one by one. So my reading says that this level, particularly right now in the small cap index, could see some sideways to profit booking coming in from the December monthly onwards in that sense. Yes, if it continues to sustain, one could do well. One should at this current level start setting up uh, a proper trail stop loss. You don't have to do that in the hourly time frame or lower time frames, because we are talking about a much higher level, uh, uh, the targets and all that. So some decent pullback reversals, probably 13,700, and the level of 12,700 is to be watched out for how the market reacts with the small cap index out there. Of course, if it continues to sustain above 14,200, then you can keep on trailing your longs accordingly in this index. Otherwise, if the correction starts, be prepared that it could be a may not be a deeper one in terms of price. That's we look at it, it could last much longer in the terms of time also, because we can see it in the quarterly charts also, that when the corrections take place, they do minimum 1 year to 2 year kind of corrections in the index out here. Even this one, we can see from 2010 to 2013, that's a 3 year correction which took place. Tiny ones are, yes, 1 year kind. Even here we saw the 1 year kind. So kindly look at the market, look at small caps from here onwards. Your risk reward ratio may not be that great. So yes, of course, some stocks will outperform, they continue to do so. Measure your risk, then think of being aggressive with the index. I hope this video is of help to you. So please do like it, share it, and also do follow me for such ideas regularly, which I do post. Disclaimer: this is not a trading or investing advice. This is purely an educational video based on the study of Ichimoku and drawing trend lines and marking levels and with Fibonacci. So kindly do your study thoroughly, and then consider your trading and investing ideas in with the index. So until then, happy investing and take care.